The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. Appreciate you starting your trading day off with me. We got 24 minutes to go until the start of the opening bell. We got about, I was going to say 24 hours, a little bit longer than that. Tomorrow we get a Fed decision. We'll see if we get any action ahead of that decision. Yesterday, continuing the acceleration higher until the market turned just above 4,200. We make it to 4,206 in the S&Ps overnight. You're trading down about 10 points, quite an acceleration of about 25 points from where we were last night. Don't shake it off, man. We are now, 30 points below where we were at on the high? Interesting action. It was quite an acceleration, folks. You back things up just on an hourly. You talk about a move, man. From the lows of last week at about 4,068, you take a look at this on a Fibonacci basis, right? You jump it up to 4,200. Even a 382 gets you back to 4,150 on this. Just large moves everywhere, man. We got VIX probably with 16 handle, 1662. I was going to say 1516 handle, 1553 we made it to yesterday on the volatility index, man. Absolutely remarkable when you consider what is going on right now in terms of we have the Fed about to hike again for the highest rate in 16 years. We have inflation that is definitely persisting longer than many had expected. I'd say that's the bare minimum, you could say, okay? Some expect it to continue with pressures even as the Fed continues to hike, and now the conversation is going to be a pause. But what do you add on top of it? The VIX hits 1553, and we find out yesterday after the bell that the U.S. government might start defaulting in about 30 days. I mean, take that for context, folks. That's literally what's happening here. You had Treasury Secretary Yellen out last night with a note saying that the measures that they're using to basically be able to fund the government may run out as early as June 1st. Estimates had been middle of July, late July, maybe even August, that they could use some accounting to stay liquid. Tax receipts come in, they figure those out, and it looks like it's not going to be that long. Now, you have a meeting, I think a week from today, at the White House between Biden and McCarthy. Things are divisive right now in politics, folks. I don't have to tell you that. And it's going to be interesting to see how this negotiation plays out. And we try and keep the politics out of TFNN the best we can, man, because that's just a recipe for disaster pretty much across the board. But of course, they come into things many times, this being one of them. And I don't know where this goes in terms of what is the play here, because I've said it before, okay? And when you come into a negotiation, right, who has the stronger footing, right? Who's the one with the most strength on their side to say, this is my offer, take it or leave it, right? Everybody has their negotiation tactics. Everybody has a strong position. You're either negotiating from a strong position or negotiating from a weak position. The tough part about this one, and I would say it on both sides, folks, okay, is that spending's out of control, man, okay? They got to get it under control, okay? Taxes should probably go up on high earners in specific scenarios in particular, okay? But just defaulting on the money that we've already spent, it's very difficult to imagine how that becomes the Republican talking point. I'd say the same thing on the Democrats, and I know they used it to a certain degree when Trump was in there. Okay, and that should not be done, period. You should say it on both sides, because the only negotiation that Republicans have is we're willing to default if we don't get what we want. That's a tough one. So I can't wait to see how it plays out. Even politically, it's a tough one, right? If we go into default, it's a bummer that this has become political, folks, because this is money already spent. And the last part to think about this isn't like paying somebody else. Do you know how many people will be hurt that are Americans by Americans not paying the bills that we already spent? Do you know how many? I mean, it goes without saying. But don't assume the best, man. Politics are horrible right now. This is politics. You don't know what's going to happen, and it's a month away. And Yellen comes out and says June last night. They were thinking June to July. Traders zero in on the June U.S. default risk, pushing yields above 5%. Some of the numbers still in July and August, though, in the market point to the fact that they think that's when things are going to get extra sticky. And yes, Yellen is part of the Biden administration, okay? They have every reason to apply pressure on the Republicans here to say we're going to default right now. You have to get it done. Take that for what it's worth. But boy, it is June 1st in no time, man. Politicians like their summer breaks as well. You're coming right into the summer when this is going to be happening. I imagine they won't be on vacation if things are really getting bad because, again, it ties into politics, and that's just bad for both sides. But nonetheless, you got a warning out there last night. You saw markets tick down on that news. We're down about 11 points coming into the opening bell, 41.75, putting things back on a 5-minute chart just from last night. You see the action closing out the session at about 41.85, and you just kept sliding until about 5 o'clock when futures closed to 41.78. We did catch a little bit of a pop at 3 a.m., but we're right back at those levels right now. Dow off 102 points. We got the banks trading lower this morning, among some others. NASDAQ 100, you could say the leader, barely down 0.1%. You got the Russell down 0.6%. Bitcoin up $200 at 28,135. Crude trading lower. How about it, man? Crude back to the lows of yesterday. Volatility continuing, 74.61 for the price of crude. We have some action in the dollar index, but boy, we had some action yesterday, man. Gold up $1 on the session, 19.94 right now. We jumped to notes and bonds ahead of a Fed decision right now. The 10-year negative by 3 ticks. You got the positive by 3 ticks. The 30-year positive by 8 ticks. We jumped over to the VIX with the handle of 16.65, and let's jump to the dollar index because we had some huge moves yesterday, and we're seeing dollar strength yet again today. The market does not like dollar strength right now, folks, and we get the market basically making session lows, down 11 points as we have the dollar index rising higher right now at 102.33. And yeah, what's Chairman Powell going to say tomorrow, man? I've been talking about it on my program, folks, that this meeting begins today. Announcement at 2 p.m. Eastern time tomorrow. Press conference at 2:30. Press conference probably more important because it seems like a quarter-point hike is all but certain. They could obviously change some language, which would be drastic in the statement, but I don't think they're going to do that because they can't do that because they don't have the information yet that is going to allow them to push forward the narrative that they will be pausing. Will they potentially pause in the June meeting? Yes, it's definitely possible. But you know what it's going to depend on? Data. And when is that meeting? Let's see. I'm going to pull up that meeting on the schedule because it comes June 13th and 14th is their next meeting, okay? They have this meeting tomorrow. It's about every 6 weeks. It's not monthly. It's about every 6 weeks they meet. They meet June 13th and 14th, and then they follow that up with July 25th and 26th, and then you got to go all the way to September 19th and 20th, okay? But staying current, they go to June 13th and 14th. Well, what's going to happen here, folks, is we're going to get whatever we get tomorrow, which is going to be a quarter-point hike, and then they're going to say they're going to be data dependent. I mean, how strong he is with the hawkish language versus the dovish language in the press conference is where things are really probably going to come down because it's going to depend, folks. We don't even have all the April data yet, right? The Fed probably has more than we have, but we don't have the April data. The market doesn't have the April data. I'm talking about jobs. I'm talking about sales, right? I'm talking about inflation. By the time we get to June, we're going to have all the April data and we're going to have all the May data. 2 months of data before that June meeting. Stay tuned, folks. We'll come back with our man Kevin Hincks from TD Ameritrade Network. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&P futures negative by 10 points right now. You get the Dow off by 91. You get NASDAQ 100 off by 8. Let's jump over to our man Kevin Hincks from the TD Ameritrade Network, the program Fast Market, every trading day at 12 noon Eastern time, folks, right here on TFNN Tiger TV. Check it out at 12 noon. Kevin Hincks, Tom White, the whole team. And boy, we got a big week going on with a Fed decision tomorrow. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yep, big week. We have to wait till tomorrow afternoon, but there's plenty to keep us busy before that, Tommy. Lots of trading opportunities here leading up to Jerome Powell tomorrow. And make no mistake, of all the things going on this week, even non-farm payrolls on Friday, Jerome Powell's press conference is going to be, and his statements will be the market-moving event of this week, Tommy, because how does he frame the economy going forward? Does he raise 25 basis points and pause? Does he 5 basis points and warn of sticky, plateauing inflation that may need more work? There's a lot of different ways he can go. How does Jerome Powell deliver that message to the overall markets, Tommy? That's what I think is going to really set the stage for the rest of the week and the weeks going forward, Tommy. But before that, we've got Uber up pretty substantially this morning. We've got AMD and Starbucks after the bell today. We've got some JOLTS data coming out. A lot to keep our minds busy until Jerome Powell speaks tomorrow, Tommy.
I appreciate the roundup, man, with everything going on. Chairman Powell, I'm going to be glued into that press conference, man, for sure. 2:30 Eastern time tomorrow, and we'll see if he changes some of the verbiage, of course, in the statement at 2 o'clock. I was talking about in the beginning of the program, Kevin. It's pretty much assured, or at least the market thinks so, that they're going to hike by 25 basis points. So that's where it's interesting, where it goes to the press conference. I mean, what kind of a hike is it? What kind of message? And what do you think about the fact, you said it, so we get payrolls for the month of April on Friday, so we don't have a lot of the April data, even though we're already into May. And then by the time they get to the June meeting, I think it's June 13th and 14th, we're actually going to get almost 2 full months of data. We're going to get April, and then we're going to get May. Do you think he's going to use a lot of language that leaves himself the ability? I mean, in my mind, it's really tough for me to imagine him showing too much conviction on either path when we are going to get, and you talk about it all the time, man, where's the data going to be, stay current, in the next 2 months alone? We're going to get 2 months of data almost before that June meeting. How do you think that maybe ties into what he's thinking, the chairman, or what they come out with on a press conference?
Well, he certainly has to leave his options open, right? I mean, look at, if some of you viewers watch the international news, look at the Reserve Bank of Australia. After pausing a month ago, they raised 25 basis points this month. So they've got inflation up around 7%, Tommy. So they're reigniting higher rates, fighting inflation, because what's happening is inflation isn't coming down as quickly as they'd like. Last Friday's year-over-year PCE data staying flat at 4.6%. Excuse me. That's not what the Fed is looking for. They don't want plateauing or stalled data on one of their most important numbers that they watch. So, and I think Jerome Powell has to be flexible and leave his options open. And that pause, or that what he wants to do there, that could set the tone for the market. He could throw a little uncertainty into these markets, on a market that, frankly, Tommy, is just below 4,200 in the S&P. It's run a long way. I was mentioning yesterday on the air, look at Apple's chart since the beginning of the year. It was 124, Tommy. Amazing. I mean, these stocks have run a long way during one quarter. So there's some risk here on the downside, if you ask me.
You know, you point out Apple, man. I pull it up here on the Thinkorswim platform. Yeah, from 124.17, I got it, making a high, above 170 yesterday, right? Yeah, 170.45, 16 billion shares outstanding. What's that? Almost $50, man. What are you talking about? $700 billion in market cap added just in Apple alone. I was reading about, what do you think in general, Kevin? I've been reading a lot of articles about whether it's Apple and Microsoft alone, just how staggering they are in terms of the percentage in the S&P 500. We have, 7-8 stocks accounting for 90% of the gains in the S&P 500. Do you see that as a risk maybe as we go? Because the numbers are startling, man, and I'm seeing more and more articles about just the concentration, and it's because of runs like this, right? You get Apple adding $700 billion in market cap in a few months. That's going to matter in the S&P.
Big companies getting bigger, Tommy, is what this is. I mean, look at just yesterday. What happened when a bank failed, one of the, a pretty good-sized bank, J.P. Morgan. The biggest bank in the country got bigger when it happened. So it's interesting. These big companies, and there's a lot, there's a handful, 8 to 10 of them out there. They just keep getting bigger. Microsoft is trying to even get bigger than that with buying Activision. Right. So, yeah, these companies are incredible. Now, Apple, they're not they're not acquiring companies. What Apple's trying to do, they're taking a different tack. What they're doing is, they're not only buying back their own stock, but they're bringing some of their production in-house. You could make a case Apple's becoming a semiconductor stock. They're starting to make semiconductors now. They're making chips for their own phones and earbuds and iPads and computers. So Apple is bringing some of their workflow in-house. They're moving some of the workflow out of China. So Apple's making moves, but they're different moves, than like Microsoft is when you try to buy Activision, where J.P. Morgan just acquired a bank on the cheap. You can tell by their stock action yesterday that the street liked the price they got in acquiring First Republic. So, yeah, there's a lot going on out there. But you're right, Tommy. One theme, big companies getting bigger. How about the news out of IBM this morning? As many as 7,800 jobs, they're going to pause and see if AI can do those jobs. Well, there's a discussion topic for the rest of the week. Jobs
listen, that one had me thinking, man. I got
AI.
the article. I got the article up here. I was going to talk about it later in the program because big picture, that's big picture, man, right? And the power of AI is if you're an executive of some of those companies, man, and you're floored, it's just amazing what's going to happen. And technology seems to move quicker than any of us can fathom it, and we're fathoming pretty quick movement right now, and it's probably going to be even quicker than that, which is just amazing. With that in mind, Kevin, what are you guys talking about on Fast Market coming up at 12 today, man?
Well, we've got 3 good names coming out with earnings after the bell. AMD, obviously, is one we're going to look at. Starbucks coming out with earnings after the bell. I believe the third one will be Ford. We're discussing that. We want to make sure we trade names with the most volume, so we're looking at that. But right now, it's AMD and Starbucks for sure, Tommy.
Starbucks, man, that's been on a tear, pushing recent highs of 115.48 yesterday. Kevin, I appreciate the time on a busy morning, man. As always, we'll be watching at 12 o'clock, and we'll talk to you tomorrow on Fed Day, man.
Have a great day, Tommy. Thanks for having me on.
You too. Folks, check it out. Fast Market from the TD Ameritrade Network every trading day, 12 noon Eastern time, right here on Tiger TV. You heard it. They're talking about three great stocks. It's still earnings season, man. We got the tech companies last week, but we get Apple Thursday as well, along with many others Kevin mentioned. AMD, Starbucks, they're filling that third slot, maybe with Ford. But yeah, how about Starbucks, right? You check this thing out, man. You get a pullback. Yeah, not even close. That's going back a year. Look at that, right? Recovers everything from where it was at the high of 2021, almost doubling its share price from $68.39 to $114.56. They're a great company, man. I probably pay way too much money to that company just for coffee when you think about how they've basically transitioned everybody to paying $6 for a cup of coffee somehow. Stay tuned, folks. We're coming back for the opening bell.
Volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, welcome back, folks. We got markets open. You're looking at S&P down about 10 points, pretty much where we were chopping around at for most of the pre-market session. You were down here last night at about 10 o'clock. You were down here this morning at about 6 a.m. That's where we open. We got the markets down about 11 points. Let's check in on the dollar index, man, because the dollar index has been having some action recently, and it's been impacting the market. And we got the dollar index with some strength again today at 102.30 right now. You jump over to crude. Crude backing off to 74.33, 74.31. Check it out, man. We got lows of last Friday at about $74, $73.93 to be exact. And folks, I mentioned tomorrow is Fed Day, but you know what else tomorrow is? Tomorrow is our man Basil Chapman. He'll be in there for a 90-minute webinar with opening call subscribers. Folks, please come on over. Check out the opening call. You click subscribe. It's right on the front page. You click subscribe. It's $149 for the month. If you're thinking about keeping the letter and you're really considering staying on as a longer-term subscriber, I encourage you to try out the 6-month or the year because you still get a 30-day money-back guarantee, folks, and you're talking about either saving almost $200 over 6 months or saving almost $600 over the year. You get a month of his newsletter. You get the webinar, 90 minutes tomorrow night. You also get many of his past archive webinars that are available to subscribers. You sign up. It's not something you're going to keep. You cancel within 30 days. You get a full refund for a money-back guarantee if you're unsatisfied. And there's going to be tremendous value tomorrow night. Basil's an outstanding educator, folks, along with being a great trader. And he always does a fantastic job, man. That's going to be 90 minutes of action-packed information, sectors, stocks, and Chapman wave techniques to focus on for the coming months. I encourage you to go over there, check it out, read what he's going to be talking about because it's a bunch of great things that he's going to be covering in terms of topics, question and answer, and then you got a month in the newsletter where you can be emailing Basil if you want to follow up on anything he's talking about. It's a tremendous value, folks, and the fact that it comes with a 30-day money-back guarantee, I encourage everybody, go over there. Check it out. Check out the opening call. Check out Mastering Probability, right? Check out my dad's Market Insights. Check out the Go Report. Check out my Rocket newsletter. And you can cancel them all and get a money-back guarantee. If you're new to TFNN, try them out, folks, okay? There's no harm in trying it out and getting a 30-day money-back guarantee. Sometimes people say, yeah, I'm sorry. I'm asking for, I say, don't be sorry. I'm thankful for trying it out. I appreciate the opportunity. Every time, say, I appreciate the opportunity for trying it out. So come on over here. Try it out. Our man, Basil Chapman. He's coming up next. And tomorrow night, and what a day, right? You got Fed Day that he'll be digesting at the close at 4 o'clock. And we got Apple earnings the next day on top of it. So the fun's not going to stop after tomorrow. And the markets, along with crude, a little bit of a sell-off here coming into it. Absolutely remarkable when you think about, with a little bit of irony, right, that what do we do? We get tech earnings. The market shakes off Amazon on a pretty big miss on AWS, which is almost the most important for them, plows through that, accelerates higher. We get a bank failure over the weekend. And the market says, nope, we were pushing highs into Fed Day, and then what are we going to get? Maybe we do get some type of rhetoric that the market likes, but maybe it's already priced in, folks. Okay, that's the thing you want to keep your eye on. Okay, we'll go over some of the technimentals, but maybe it's priced in, and I'll bring you back to the dollar index because something's priced into the dollar index here, okay? We started hiking when the dollar was at 98. You can make the argument that we ran from 90 to 98, factoring in that we were going to hike, okay? Not sure that was fully priced in there, but you could make the argument. Nonetheless, we go from 98 up to 115. You sucked out all the air from the dollar from 115 down to almost 100 by January. Well, that's forward-looking, folks. Things got a little awry back in March. Remember when Chairman Powell came out and said that we're going to have to go higher? The market was pricing that in ahead of time. But then what happened? We got a little bit of a banking crisis. It complicated the issue. The dollar's back to 102 right now. But that's a lot of pullback when the Fed hasn't even paused its hikes. Okay, that's forward-looking. So it is what it is. Take that for what it's worth. We get the S&Ps down by 15. Let's check in on some of the equities that are moving. Uber not down. Uber up by 6%, man. Pushing the highs of earlier in the year. Those highs, 37.58. We're at 34.60 right now on Uber. And jumping over to Uber for their numbers. Profit beat shows strong demand for rides and food. Poised to expand profitability again. The company just became profitable. Surging as much as 11%. They beat analyst estimates. Consumers continue to spend more on rides and food takeout. Yeah, the food takeout one I'm more worried. I've talked about, man. Rides are the deal. As in, that's changed the world forever, okay? Adjusted earnings before interest, taxes, depreciation, EBITDA, $761 million in the first quarter. That beat the 678 the market was looking for. Record profitability and free cash flow, poised to expand profitability again in Q2. And yeah, the market likes to hear when you're shifting to not being profitable to being profitable. And I just want to get to this part. Delivery bookings is in the black. Okay, that's rides. That's food deliveries. Ride hailing is in the pink. Okay, and you see during the pandemic, right, how it all went to delivery bookings. But look at the way they're expanding, and then they got freight on top of it now. How about freight at $1.5 billion in the quarter? And it's like a nothing mention. That is quite a number that they've expanded on. And you see the differential that they've put together versus a company like Lyft that doesn't do food delivery. Pretty sure they're not crushing freight to the tune of $1.5 billion. And I do have like a very tiny share of Uber, probably in a retirement account, okay? But no real action on Uber. But yeah, in the future, folks, we did have Uber in my newsletter a while back. Got stopped out on this ride to nothing. But one of the reasons why, and I say it often, is that they changed the U.S. language. Their company name became a verb in the U.S. language. Boy, that's very difficult to do. You want to take an Uber? Let's Uber, right? You say, let's Uber. That would be Uber, a verb. Yeah, very few companies have achieved that. And when you think about it, they achieved it before profitability, right? And now it's time to cash in. And they've been able to capitalize greatly on the food part of their business because the ride hailing was always big, right? But the pandemic allowed them to accelerate the food delivery business. Now, my perception there is that's going to be tough going forward because people are going to wake up to the fact that they don't like paying an absurd amount of money to avoid a 10-minute drive to go pick up your food. Okay? Rides are a different deal. The food deal, that's a luxury, to put it. The ride hailing, not as much as a luxury. When you order an Uber to go to the airport, you got to order an Uber because you don't have a car. That's not a luxury. That's a cost of your normal monthly, expenses. Sitting on the couch and watching some television one night and saying, I don't feel like driving to get takeout or something like that. I don't feel like cooking in the kitchen. I'm just going to order Uber Eats and it's going to get dropped off. That's a luxury. And if it becomes too expensive, you'll see it. Basically, demand would diminish, but not today, man, with Uber, up about 6% on their numbers after the bell. Before the bell this morning. All right, let's see how that dollar's trading right now as we get the S&P sitting right at about 41.70. Yeah, holding the highs and the S&P holding the lows. It's going to be interesting where we go. Let's check out some of the FANG stocks from last week. Amazon, quite a pullback from 123. I mean, you're down about 10% from where this thing came out with their numbers. They were the only miss last week. Apple shares this morning up by 1/3%. That's even with the market getting hit, right? Microsoft shares this morning up by 0.5%. Some of the other big stocks adding. Nvidia down 1.2. Tesla shares up 2%. Stay tuned, folks. We'll be coming back in 3 minutes.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps down about 17 points, trading right at about 4170, where it's been chopping around right now. Let's jump to IBM. So IBM, let me jump to IBM, see how it's trading right now. IBM shares right now down about 0.3% with the market right now. But pretty interesting when you look at exactly what gets said about these jobs. So they are pausing roughly almost 8,000 IBM jobs could be replaced by AI and automation. When you look at the logic behind it, it's pretty staggering how this is going to be an industry-wide phenomenon almost instantly. You look at some of the tasks that many people are employed right now to do, and they are going to lose their jobs because it's not going to exist, folks. Hiring in back office functions, okay, such as human resources, will be suspended or slowed. So these are non-customer facing roles. They amount to roughly 26,000 workers at a company like IBM, and this is the CEO saying that they could easily see 30% of that getting replaced by AI over the next 5 years. Time moves very quickly, man. Okay, 5 years is like nothing. And that would mean if it's 30%, 7,800 jobs. So it's ballparking right now, for sure, in terms of where they are, where they're going to go, how sure they are of those numbers. But you look at what they're talking about here. Okay, now we talk about whether it's customer service, writing text, generating code. But this plan, in terms of Krishna with IBM, one of the biggest out there so far, more mundane tasks such as employment verification letters, right? Just tell a computer to do it, man. Moving employees between departments. Those are just going to be automated almost instantly. Now, some HR functions, evaluating workforce composition, productivity, you're still going to have humans in there, okay? Probably won't be replaced over the next decade, is only as far as he'd go, though, right? That's not very convincing, man. They get 26,000 employees there. The company announced job cuts earlier this year, and now they're saying they're pausing that number, and it makes sense, man. Employment verification letters, that seems like something a computer should already be doing, let alone when AI is around. Yeah, so pay attention to that one for sure. Now, we'll jump to the next AI story. Homework help firm? Yeah, they're in trouble because guess what? AI can do homework and it can help you do everything. Chegg plummeted 42% after warning the ChatGPT tool is threatening growth of its homework help services, one of the most notable market reactions yet to signs that AI is upending the industry. Now you jump over to them, I think it's CHGG, right? CHGG, yeah. Let's see how they're trading right now. Yeah, that's quite a chart. Hold on one second. Let me pull that up for you. There you go, down 48%, man. So what they talk about here, okay, this company offers online guidance for students taking tests and writing essays. They also gave revenue and profit forecast that fell short. But they make their money from subscriptions that start at $16 a month, and AI chatbots are going to be an alternative, period. End of sentence. They're going to be an alternative to everything, folks. Okay, you're going to be able to have conversations with a computer, and when you think about helping students out with math, reading, that seems like an area that is just ripe for technology to really improve things. I was having conversations with my dad recently and just talking about some of the apps and how educational they are and the way that they're able to deliver alphabet, numbers. One in particular we're watching was a program on Netflix called Number Blocks. If you have young kids, folks, in the house, you got grandkids, you got young kids, check out the program Number Blocks, okay? Because it teaches kids how to count. It teaches them with a little cartoon. And yes, it's still screen time. You want to protect the screen time, but I talk about it all the time. There is good screen time and bad screen time. And we were talking about it, saying it's very difficult to even imagine that you put a kid in a school, you put them in there with 13, 15 kids in a classroom, you got one teacher, they're battling with the kids, they're battling for attention, just like any teacher and any kid, okay? And versus a finely tuned app that delivers the exact best way to convey knowledge to a young person learning, whether it's about reading, writing, alphabet, letters, math. Those apps seem like they are powered in a way, if done well, okay, that can far exceed where your child could probably be in a school. And it sounds insane, but it's coming, because the way that kids can learn, and you think about it, it's just perfecting the delivery of that teaching, right? The delivery of the knowledge. It's perfecting the best way to deliver that knowledge to students. And I think technology is about to crush it, man, because I see the way it has with Tommy and good screen time. And you should see it, man. He was busting out Grandpa, man. Grandpa, they had one part of the number blocks, and it was 10 blocks, but like 7 were shaded. And so the right number was the number that was not shaded, which was 3. And Grandpa was guessing 7, and Tommy was guessing 3, the right number. So Tommy was on there. He's 2 years old. But you see the power of that learning. And so it's not surprising that a company that focuses on children's learning that is not using AI might be in trouble, okay? Now, you twist that around. Why aren't they using AI? Why didn't they catch the run? Why didn't they say they were going to use AI to do everything? Now, profit forecasts matter. Okay, that's partly. But you go back on this equity, yeah, they've been in trouble for some time, man. Okay, they accelerated higher, of course, ideal situation during the pandemic. And they're now well below where they came into the pandemic, which is crazy when you think about how well things went. But as with many growth companies, they didn't handle things well, and it's pulled back dramatically, even from when you came into the pandemic, which would be an ideal scenario for a company that focuses on online learning when schools shut down, right? Yeah. All right, what else we got pulled up here? Morgan Stanley, they're cutting 3,000 more jobs as deal-making slumps. Not too surprising there. Oh, this one, how about Coinbase, man? Insiders sued for dumping stock, saving $1 billion. The CEO, the board members. Now, folks, I've been saying it a while. If you're going to get into crypto, I just get into crypto, man. Don't get into Coinbase, and I wouldn't even keep my money on Coinbase. And I've used Coinbase before. In the early days, man, I was using Coinbase to facilitate crypto transactions when I was playing online poker that used crypto. So I'd buy a Bitcoin, but I wouldn't hold it. Then I would transfer that Bitcoin to an online poker site, and that Bitcoin would instantly be turned back into dollars for me. So I kind of had no currency risk. Boy, I wish I had just kept the Bitcoin that I was doing, because I've made a lot of money playing poker, folks. But if I had just taken that Bitcoin and just kept it instead of putting it on a poker site, even though I was making money with the poker, yeah, I think I was buying Bitcoin when it was around $2,000. $2,000, and that was before the first run up to 60. But hey, that's hindsight as they go. But yeah, I would not be in Coinbase. Coinbase down 3.1% right now, and it's not surprising, because guess what? Look at the chart, man. They pushed this out to the public at the highs of Bitcoin, $429, man. You're trading at $48.59 right now. How about this one? Rivian. Was reading about this yesterday, right? Pushed it out to the public, same deal. Got valued at $150 billion, folks. We were joking about it at the time, but if anybody ever comes to you and they say they're raising capital for their business, which is what they did when they went to public, okay? They went to the public markets and said, hey, we're raising capital for our business. We're willing to give you shares of Rivian Automotive at the market valuation of, I think it was like 120 billion, 100 billion, 150. It went up to 150 billion. And you said, how much revenue do you have? And said, we don't have revenue yet, but we're going to be a great company. You'd say, I don't think I'm going to give you that 150 billion market valuation. And, you know, Amazon was behind it. It was a euphoric market at the time. But remember that one for some common sense, man. Because right now, I think they're pushing about a 12 billion market valuation, probably more in line with a company that's just beginning their efforts to make vehicles. Stay tuned, folks. Markets at about 41.70. One more segment. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the market sitting pretty much where we've been for the entire time of the program right now, down about 17 points, trading at 41.68 in the S&Ps. NASDAQ 100, you could say the strongest, right? Barely in the red. For the NASDAQ 100, we get the Dow off 168, though, and you've seen the Russell begin to deteriorate throughout the program for sure. We jump over to those banks. JP Morgan, giving up almost $2 from where it was at earlier in the session, down 0.2%. Citi down 1.5%. Wells Fargo down 2.1% right now. Some of those banks that had been in the conversation with First Republic, PacWest, now they had some really strong numbers, man. Really strong numbers. You back it up to last Tuesday, you traded from $10 up to $12.99. You held on to a lot of those gains the next day. It's been a quick slide, though, as the market's a little worried, folks, that it's not over. Because look at the action. As we were just at 1050 in this equity, and just like that, we're at 850. In no time, as the Russell continues to get pummeled, man, down 1.35%. Jumping back to that Coinbase article real quick, because it was a little bit different than what I was mentioning, in that there's Coinbase, okay, is that I forgot they went direct listing to the market. So this is what even makes it more interesting. You go direct listing in the market, and you had the chairman and the CEO and board members, including Mark Anderson, right, of Anderson Horowitz, I think it is. They avoided more than $1 billion in losses because they deployed the so-called direct listing instead of the IPO. The IPO probably would have had a lockup. right? And then rapidly sold off $2.9 billion in stock. Then the management later reveals material negative information. Well, what they probably should have revealed too is that they were pumping up Bitcoin at the time to basically reach all-time highs right when that thing went IPO. Within 5 weeks, those shares that they sold off declined by over $1 billion. Yeah, the market cap of the company Coinbase declined by $37 billion. Man, buyer beware, to say the least. Coinbase down 2.6% today. Market basically at session lows right now, down an even 20 points. Fed day tomorrow. Basil Chapman's up next, folks. Head on over to the front page of TFNN. Please sign up for the opening call. You'll be in Basil's webinar tomorrow. We'll see you tomorrow morning at 9 o'clock. Have a great Tuesday, everybody.